Okay, this video is going to cover some examples of a TC, which we identify as a trend confirmation. This is a term I've put together, and you may see it in our trading room. When we say TC, that's what we're talking about, is a trend confirmation. This is really the first step in our strategy, and the whole basis behind our strategy is simply to identify where the big boys are going to take the market, and when we identify that, then we jump in to pick up some of the scraps or pick up some of the crumbs. We're not in it to make big wins. When you get greedy with this, you can get into trouble. So you want to remain conservative, and that'll allow you to be a lot more consistent with your wins. If you are looking to make some bigger, more longer runs in the market, this might not be your strategy. You may want to find a different strategy that fits your personality a little better. But what I'm all about is picking up just a piece here and there. And when I can do that with high probability patterns, I'm pretty darn consistent with this, and it works really well if you can be disciplined. Okay, so the TC is really the first step here, and what we want to do is we use really three different patterns or indicators to identify for us where the market's going directional wise, and then it comes to an actual entry signal later on. But when you're trading, you really have three decisions here. You can buy, you can sell, or you can stay out. And the whole point of what we go through here, sorry about that, I don't know what that is. The whole point about going through this is to really eliminate one of those three decisions. So when we find a trend confirmation or a pattern starting to go, let's say, long or going up, we've eliminated the decision to sell. And now we only have two decisions to either buy or stay out. And that's kind of whittling down and focusing our approach here in the market. So the first thing we want to see when we're watching the market, and you can see this is just a shot of the morning here. This is where the 9:30 opening bell rang, and then the market kind of took off. It went down. What we really want to see here is identify where actually we look at number one, the MACD. What's the MACD telling for us? The MACD is a trend following indicator, and a lot of technical and analysts use it simply when it crosses to give them an indication of where the trend's going. So here you can see the trend is going long. Here it's looking as if it's going short, but then it actually stays pretty flat, and that's a range characteristic, and you can definitely tell that the market is in a range at that point there. Okay, and then as it crosses and starts to spread out, it's in a downtrend there. So that's kind of what we use the MACD for, is our first indication of where we think the trend is going. Number one, for this particular TC, we see the MACD crosses and starts to spread out, going in the long position. Now when the MACD does that, that's our first confirmation. We need to have three confirmations that we're looking for, okay? The 1, 2, 3 step approach. That's our first one, that we have an indication that it's going long. The second thing we're going to look for is where our SMAs are going. These are our SMAs, simple moving averages, and we have them crossing here into a long position. So now our MACD and our SMAs are both confirming each other, basically. And we want to see that. The third confirmation we want to see is actually in what we call a market pattern. Right here, it's a stair-step pattern basically. The market has created a low here, and this is the a little bit more complicated than simply a cross in your indicator. But you want to look for and be good at identifying where the market waves are. Because the market fluctuates, and it pushes up and comes back a bit, and pushes and comes back a bit, and pushes and comes back a bit. The stair-step pattern is the basic pattern we use with this strategy, and it's a series of highs or low points. So we have a low here where the market hit a support level and turned around and went up. It comes into a little bit of a resistance and sucks back, creating a higher low. Now that's basically kind of what a stair looks like right here. That is the essence of what we want to see. So we now have the MACD crosses. We know we're not going to sell. We want to look for a reason to go long at this point. Our second confirmation happens here when the SMAs cross, and we now know we are ready to go long. And then the third one happens when we see this stair step here. Because what we want to do by our objective is to wait for that hesitation in the market and then be able to enter as it starts to go our way again. There. Okay? That's the goal, and that's why we wait for the hesitation. We don't want to get in too soon. Say we enter the market like right here. Well, it's going to suck back against us. We want to wait for that suck back first and then catch it as the momentum continues in our direction. The way we measure the strength of that particular pattern is on the tricks indicator. So if you draw or visualize 2 points here for your trend confirmation and go straight down to what your tricks is telling you, you can do the same thing here. Draw some lines here to indicate that. Well, we have a pretty strong positive slope here and a pretty strong positive slope there. This is all relative as far as the slope and the strength here, but there are a few things you want to see. You do want to see a pretty significant slope between these points, and you want to see the second half of this stair step, if going long like this pattern, to be above the zero line, or at least at the zero line, at or above the zero line, because that's going to show strength behind the momentum of the market, that it is going to continue into a trend going long. And that's the whole key with the trend confirmation. So here is a good example of all three patterns. We have a cross in the MACD, crossing the SMA, and a stair step happening right here. As we draw our lines down, we can see the tricks is telling us that there is strength behind this stair step pattern, and we're looking now for an entry to go long. That's a great pattern right there. Let me show you the pattern again in an example where we would not take a trade. Okay, the pattern here, this is a stair step again happening. We've got a high, the market comes down, sucks back, creates a lower high. Well, that's a stair step. Now look at what the indicators are telling us down here. We've got a high and a lower high. It's below the zero line. So that's a pretty good pattern, right? What's missing? We need to have confirmations of this pattern. It doesn't really matter what order everything goes in as long as all three are there. Well, at the point that this happens, our SMAs have not crossed back through going into a short position, and our MACD hasn't quite crossed itself either, although it's gravitating towards a crossing point, and so are our SMAs, but they aren't quite there yet. So that would be a pattern that we don't take. Let's look at this again. Another stair step pattern. We've got a low here. The market runs up, sucks back, gives us a higher low. We've got a nice positive slope here. The points down here, we've got a positive slope. The second low is above the zero line, and that's a good pattern. The problem here is we're missing some things. Okay, yes, the SMAs are still technically in a long position, but I want to point out here, look at the MACD. This is a little bit confusing now because the MACD is in a very shallow place, giving us basically a ranging characteristic. This would be the reason not to take this. Although I think some traders probably would, simply because if at this point it starts turning around again, maybe you could say that, yeah, this is at least going to move far enough to make a half point or 5 ticks. Well, you can do that. But I'm telling you from experience, you want to be very selective in the patterns you take as trades, because you want to only pick the highest probability trades. And when you can do that, your winning average is going to go up, and your overall profitability in the long run is going to go up, because you can take mediocre patterns and have a lot of opportunities to trade, but you're also going to have a decrease in winning average when you do that. And sometimes if you trade too much, that can cause some psychological frustrations from losing and spiral into a psychological spiral of losses. And you just want to avoid at all costs putting yourself in a position to struggle psychologically in the market. Be strict with yourself. Be disciplined about the patterns you're taking and be extremely objective. Don't let your emotions cloud your judgment, and when you see the market push up, don't just jump in. Be very analytical about your patterns here. Like I said, the one problem I have with this pattern is the MACD is very, very tight here. We don't really, it's at this point it's really hard to say where it's going. And if after looking back at it, look, you can tell we had a very identifiable range going on right here. And you want to avoid trading in ranges. That's a brief overview now of what the TC patterns are. Trend confirmations, you want to have 3. The MACD crossing going into the long or short position you want. Your SMAs crossing to confirm your MACD, and then that pattern, the stair-step pattern, showing strength in your lower tricks indicator. That's the key. You need to have the tricks indicator showing the strength behind that market pattern, because you can identify that market pattern as much as you want, but if the tricks isn't confirming that pattern, then it's no good. So there you go. That's the TC.